September 16th, 2024. Today's a rollover day on the E-mini. So on the E-mini, it looks like there's a massive gap up, but it's not real because it's just the changing prices of the contract. So this is not actually, this should not be treated as a big gap up. I personally don't treat it as a big gap up. I just trade the SPY on days like this, or I just watch the SPY on days like this and base all my decisions off of what's going on in the SPY. Granted, you only have to watch it for the first 15 to 20 bars because after that, the moving average has moved up. So once the moving average gets up here, then you can just watch the E-mini and it'll be basically the exact same thing. But I personally just prefer to watch the SPY for at least the first hour on days like this. You can see this is a continuous 15-minute chart, right? So you can see there's a bar accounting for everything, and then there's just a massive gap up. And again, it's just because the changing price of the mini. So I just kind of take it with a grain of salt. I don't really count, quote unquote, count the gap as anything in particular. The hourly chart, 5 straight bear closes, so it's possible we're going lower. Bears maybe trying to test. I don't know. These kind of things always screw me up because to me it looks like a gap, but I don't treat it that way. So basically, bear bar closing near its low on bar 1. It's closing near the bottom of this trading range we had that started around here yesterday. So there were buyers here, there were buyers here. This is kind of one of those weird spots where, on the mini, it looks like a credible sell because it's a bear bar closing near its low after a large gap up. So it's possible we get a bearish trend, but for me, it just looks like a big bear bar at the bottom of a trading range. Are we always in short? We might be always in short. This could be leg 1, pullback, and the start of the second leg down. The bulls, they're arguing we're basically at the bottom of this trading range. We bought in this area right here. We bought in it over here. You could sell the close of bar 1 and take a chance that we've seen the low of the day. But I'm not too sure that that's really a great idea. On any given day, there's only a 20% chance that you've seen the high or low of the day on bar 1. So I don't think this is all that amazing. Yeah. I suppose if we're using the active E-mini contract, I suppose you have to say that we're close to the all-time high. Oops. You can see the all-time high is 57.21. You could just say ESZ 24. Actually, that's what I'll do. Okay. So I'm just changing the market to the active E-mini, and then you can just see it here. So if you don't understand how E-mini contracts work, basically the futures contracts, you can see in advance. I don't know a way to pull up the actual futures thing without showing my account info, so I'm not going to do it. But you can just look for the current E-mini contract. If you just do /ES, it just pulls up a continuous E-mini. But if you do ESZ24, that's the current E-mini. But you can see it didn't really exist over here. So that's why the continuous one usually works better. But on days like this, I just start using the continuous one tomorrow. And today I'll just use the current one. So just changing some things around. So let's go back to this. So the hourly chart, where the bear is trying to get to, I don't know. It's the first time they've broken below the moving average since over here. So you can see we touched it here. So we'll see if the first close below the moving average ends up holding. There's probably support somewhere down in this area over here, 10 to 15 points below. On the daily chart, you can see 5 straight bull bars, but we're nearing the sell climax high. So I don't know how much higher we're going to go. You can see the momentum is waning, right? Good looking bull bar, not great follow through bar, but another good looking bull bar, smaller bull bar, and the tails increasing in size. So not as great as it could be up here. We're probably going to have to get up to this area, but the question is, are we going to get there right now, or are we going to pull back to the moving average and then start the second leg up to that area? If we do start the second leg up, we'll probably stall here. So let's say we get, 5, this whole week is just sideways to down, and then another week of sideways, basically to finish the month. And then next month we start the second leg up. We'll probably test up to at least here, but we might have to get to the all-time high if we pull back first. Monthly chart, the open of the month is going to be important. 57.19. That's only 30 points above, and we've had 30-point days, or 30-point moves during the day very regularly. So that's something to keep in mind. Let me just something. So the open of the week, 56.88, 75. So I just keep those things. And I'm just going to pull up the Globex real quick and get the Globex high and low. So we already broke below the Globex low, and the Globex high is below yesterday's high. So this is not a very big Globex range. When the Globex range is small, I mean, it's only a 16-point Globex range, and we have a 10-point bar on the open. So really, it's not unlikely that we break out of both the high and the low of Globex today. So consecutive bear bars, 1, 2, but it's closing stronger than it was. But still, if you sold the close of 1, are you that content with how 2 went? Not really. I mean, the bar is so much smaller. So if you're selling in a support area. You see the bulls bought. The bulls are willing to buy over here as well. So you're selling in a support area. You're hoping 3 is a big bear bar closing near its low, and then you'd be able to sell for at least a second leg down. There's probably buyers below yesterday's low, but we might have to get there. So sellers above 2, if we go above 2, probably a credible scalp to sell above 2, yell in higher. And if 3 is a big bull bar closing near its high, then you can just get out. So if you sell above 2 and then 3 closes somewhere up here, then it might make more sense to just exit the trade. But if it's anything other than that, then those traders will continue to hold, betting on a second leg down from 1 and 2. So traders who sold close to 2, not doing that great yet. You can see the bulls, again, we're kind of waiting on a give up bar here at this point. The bears sell below 1, and for them, this is a bear breakout. It's a bear channel, right? So it's a bear channel. It might be more of a triangle though, and it could be a wedge, 1, 2, 3. So it's probably more of a triangle, but the bears want to break out below the triangle and a measure move down. And the bulls, even if we get the breakout below the triangle, they're going to try to make the breakout fail. So it's a possible wedge. One of the reasons why it's important why I like making videos is because I start noticing little things that I wasn't seeing a minute ago. I was kind of thinking more about the support in this way, where we bought in this area over here, we bought in this area over here. We're a little bit below it, but I didn't even see the wedge until I just, was looking and pointed it out. So you'll notice a lot more stuff. If you kind of talk to yourself during market hours, you'll notice a lot more stuff. So what if 3 is an inside bar closing on its high? Maybe you could buy it. It's probably a low probability swing, I would say. But I don't think it's worth doing anything just yet, even if it's a bear bar. 3 closes on its high. It's going to be a credible swing trade, but it's really low. It's going to be low probability for sure. So what are the odds 3 is the low of the day? Probably like 30%. So 3 now traded above 2, which makes this trade a little bit worse because a lot of traders are going to be willing to sell above 2. For a second like down, you can see traders were willing to sell above 2. So now if 3 closes on its high, it's not as interesting as it would have been had it been an inside bar. So the bear who sold above 2, not able to make 5 points yet. So 83.50. So it needs to get basically a new low. Would be able to make traders, or a little bit below, 2 ticks below down here would be a 5-point scalp for the bears who sold above 2. Possible we're going to get 2 legs sideways to up here because of the wedge. But the thing you have to keep in mind, really important, is that the wedge, these 3 pushes formed over the course of 47 bars. So if we do get a correction here, you can expect it to be, 20 bars. It's probably, but again, you have to keep in mind, look at how these legs move down. So, they're bare legs. There were clear bull legs along the way as well, but there were clear bear legs, but the bear legs were choppy. This one moved in 3 pushes: 1, pull back, 2, pull back, 3. And then even this: 1, pull back, 2, pull back, 3. So, the legs are moving, or you could just say, 1, pull back, 2. You could say that as well. So the bare legs are not moving straight down. They were moving, sideways to down. So if we're going to get a bull correction that's 10 to 20 bars, you're not expecting that bull correction to be straight up. You're expecting the bullish correction to be sideways to up. Price action should mirror itself. Again, we might get a surprise bull breakout. I don't know, but it's not really all that likely. The context of the day is relatively neutral, to be honest. How often after this do we just get a huge bull bar closing near its high here? Probably not all that frequently. It's probably going to be some sort of trading range bar. Would I be surprised if we got up to this area, the 57.19 area, the open of the month? Not really. It is, on the daily chart, it's a sell climax high. On the weekly chart, it's the high of last week or the other week. You can see 57.0225 is last week's high. So I think we might have to trigger above last week's high at some point today. The bears really want to make this an inside bar so we can get an II pattern, bear bars closing near their lows, and they can sell for a swing down. So last week's high, 5702.25, right here. Just yesterday's high, really. So yesterday's high is an important resistance above, or an important magnet above, I should say. And because A, yesterday's high is always a magnet above. B, because it's last week's high and it's a buy signal bar. And C, it's the next magnet before the open of the month. The open of the month being 57.19, I believe. Let me just double check. Yeah, 57.19.25. So here and then somewhere up here is the magnet after that. You can see we're around the middle of yesterday's range, which increases the chances of a trading range day and increases the chances of an inside day as well. So do I think 1 is the high of the day? Probably not. Maybe 25% chance right now. 20, 25. It's probably 25, I would say. We're probably still always in short from 1 and 2, but this is not ideal always in short. So even if 4 closes on its high, it's kind of hard to want to buy. 3 would be your buy signal bar. Well, I guess technically 2 would be your buy signal bar because 3 traded above it. So if you're betting that 2 is the low of the day and 2 is not a very good buy signal bar. So I think a lot of the traders who are buying know it's probably more of a scalp. You can see limit order traders are making money, or some money at least. If they sold above the high, they were able to make a 3-point scalp. It's not very good, but you can see the bears who sold to close at 2, they scaled in above 3 or above 2 during 3 and then scalped out. That's kind of part of the thing about limit order trading that makes it tough. It's like being able to, sell above here and just know to scalp out around the close of 2. So it's a lot more discretionary if you want to be a good limit order trader. So it can be difficult. Can you buy above 4 if it closes on its high? Yeah, it's a possible low of the day, but it's going to pull back first. So keep in mind how uh, the other bars have been moving, or the few bars moved in the few legs sideways to down. So this is probably going to be a little bit more sideways to up rather than straight up. I bought taking a chance it's the high of the day, or we've seen the low of the day, but I bought small and I know it's going to pull back. Problem is, it's potentially a big risk. But this high is last week's high, and I think we might have to trigger the buy signal on last week's high. I don't think we go straight there, though. I think it will be sideways to up. I don't know if we pull all the way. It's possible we pull all the way back to the bar 3 high. So limit order bulls, if I was a limit order trader, I would probably be looking to buy the bar 3 high and buy more if we went to a new low. You can see over here, bears, they sold the high, they made money. So they sold above 4, they made money during 7. They sold above 7, scaled in, made money, 12, 13. They sold above 12, made money. They sold above 15, made money. They sold above 31, made money. So if you're a bear and you just faded every new high, you made a lot of money. And that's how it works on trading range days. So again, I think this is a big wedge, and we might need 10 to 20 bars sideways to up. So that's part of my contextual argument here. The risk is big, which is a downside, but I'm trading reasonably small. And if we go more sideways to up, it's possible I scalp out at the prior day's high. Usually when you get to a signal on a higher time frame, the market pulls back before it goes too far. I've been trying to work on just being better about scalping and trading ranges, but I'm not that convinced. Well, I'm convinced we're in a trading range, but I'm just not. This it's kind of tough, right? Because I think we're in an overall trading range here, and I want to exit, but potentially at the high because the limit order bears they keep selling and making money at the new high. Granted, we have a lower high here, but still. But 4 was a swing trade. If 5 closes on its high, we're only 3 minutes into the bar, so it very well might not close on its high. But if 5 closes on its high, it's kind of difficult uh, to look to scalp at high if we're getting 2 really good closes. I can always buy it back if we get a third really good close. Make my life easier if this got bigger and more climactic. I could just exit at the high of the prior day. So what about the limit order bears who sold above 3? Well, I mentioned if you're selling above 2 or 3, If you get a big bull bar closing near its high, you need to exit. So that's part of the trap traders here. I don't know if we're going to trap bears who sold above the bar one high. It's possible. Nothing to sell. All right, I'm thinking. All right, so good follow through bar. Some traders might scalp. I have an order to take part off at this high, which I think is fine. Four and five, you might be buying. So if you buy the close of five, you might be buying high in the potential trading range. But we're going to get a second leg up from 4 and 5. So you might have to sit through a few legs sideways to down. But ultimately, I do think we're going maybe somewhere up into this area. Which, surprise, surprise, if you look at the monthly chart, the open of the month 57, 19, 25, the measured move 57. Well, depends which measured move you use, right? But I bet there's one. There it is, 57, 50. So it's a tick above. The measured move up is right where the open of the month is, which is a magnet for the bulls. What if 6 is a bear bar closing near its low? There should be buyers below, so I'm not going to exit, but I'd really prefer if it wasn't a big bear bar closing near its low. But might be a trading range, might not get what I prefer. If we overlap with the bar one high, then, because remember, the bears, what did they do? They sold above the bar one high and they scaled in. I don't think we even triggered above this. We have not triggered above the bar two high yet. So this is actually a really big potential selling point for the bulls if we can keep this gap open. Increases the odds of a swing trade. And this could be spike and then pull back and then possible channel up. So I think that gap is actually really important. So I really think it's interesting. Going to be interesting if we keep that gap open. I think we're going above yesterday's high. I don't see why the bulls would not be able to get it, to at least attempt to get above the high, because the reality is this is the first attempt, right? This is your first attempt to get above the high. They're going to get a second try. And the first down could be uncomfortable to sit through if you're long, but it's going to be minor. So you can see the gap is trying to close. The bears are hoping head and shoulders top. I think that 4 and 5 is too strong. I think we're going to get above yesterday's high. So I don't think I'm going to exit below 6. What if 7 is consecutive large bear bars closing near their lows? Then I might exit. Bears need to convince me that they're going to make the market always short in order for me to exit. So what if, let's say, so I have an order to take off, I think, like 60% of my position at this high. So I'm not sure how the math is for that particular piece of it, but I think it's still high probability. My risk is large and my reward is not as large right now. But I still think it's okay to hold a piece for a swing. So I'm not going to exit below that. I don't think that's the low of the day. Or sorry, the high of the day. What if 7 doesn't trade below 6 and let's say it closes right here? Well, then you can pull your stop to below 6 because we have spike 4 or 5, pullback 6, possible bull channel starting. So on 7, it'll be interesting to see if the bulls who bought the close of 5 are sufficiently disappointed with 6 that they look to exit. Do I think they will? I don't know. I think we're going to get to yesterday's high. I think they might hold and see if they can scalp out up in that area. I'm going to pull my stop to the bar 5 low. It's currently below bar 3, but I don't think a stop that wide is necessary. So you can see some bulls exiting. That's what's causing this. So stop below bar 5. Remember, the reason my stop's below 5 is because realistically, if we get below 5, my premise is not nearly as valid as it is up here, and I need to reassess the trade. If 7 is a bear bar closing near its low, that I would exit below. Because now we've traded back up to the bar 5 high, and you can see some bulls are exiting. This is just one of those situations where it's better not to let the trade turn into a large loss. So if 7 is a disappointing bear bar, then I can just exit because it looks like initially the bulls who sold the close of or bought the close of 5 were disappointed in 6, and so some of them are exiting. However, we're only 2 minutes into the bar, so we don't know what's going to happen for the remainder of the bar. It's probably not going to look like this when it closes. It's probably either going to get bought back up or it's going to be a bear bar somewhere down here. Right now, maybe it's a little more likely it's the bear bar, but the thing is, if it gets bought back up, the bulls who sold out of their longs on the close of 5 because of how 6 ended. So, or sorry, they bought the close of 5, disappointed 6, and sold out during 7. The bulls who did that, if 7 becomes a bull bar closing on its high, they're going to feel trapped out. So they might need to get back in. So that's the risk you run by exiting high here. Obviously, it's not a bad idea because you can see what's going on right here. But so some of the bulls did exit. You can see bulls who bought above 4 were able to scalp out with 10 points. Okay, so 7 might become that bear bar. So I'm going to get stopped out here. Okay, so I just exited around break even. Kind of surprised at how deep this pullback was. 50% pullback for the bulls from 3, 4, and 5 was around the moving average. Three, 4, and 5 should still get a second leg. So a bear bar, but basically a doji bar. We're probably still always in long, so you can be holding long. Reasonable to do. I probably didn't need to exit there. Sometimes you just mentally aren't willing to take a loss on a trade, and that was probably my mistake there. But so now what do you do? Well, if you're still long, your stop's below 3, and you can take a chance that we're not going to get a big bear bar on bar 8. So usually when you trigger a higher time frame buy, like a daily chart buy, like above Friday's high, you're going to pull back first or after you do it. So I would imagine that if we trigger it right here, sometimes you get really close to triggering these types of signals and then don't. But, or it pulls back first and then it does. But see what this ends up being. We're still always in long. Yeah, the reality was there's more buyers around the moving average, and it's around a 50% pullback. So if you're buying before, you can just hold and take a chance of seeing the low of the day. So probably did not need to exit there. If 8 is an inside bar, I've mentioned before, if you get 3 bars against you, that's usually a sign that your trend is coming to an end. So you probably don't want to let 8 be a bear bar if you're a bull. If it is a bear bar, then it's really not great to be long because you're taking, it's possible that it's probably just a trading range. You're not usually going to get spike 3, 4, 5, and then a 3-bar pullback 6, 7, 8. So any sort of bull bar here increases the odds of us going higher. What if 8 is bull bar closing near a tie? We're still always in long. I'm probably just going to buy it if it is, to be honest. I think we're going to get a second leg up from 4 and 5. Just put my position back on. You don't really want to see a bear close here if you're a bull. 3 straight closes against you makes this a lot more of a trading range. You're gonna have a tough time finding strong bull trends that have 3 bear closes against the bulls. So this close is important. You can see traders fighting over it. So it's a doji bar. So what does that mean? Well, it's not a bear close. So the bulls did at least the minimum. I bought back my small position size. Well, I bought back smaller actually this time, but I'm just basically taking a chance that we're still have seen the low of the day. I really didn't need to exit. So if I was long, if I had remained long, I would not have exited below 8. Therefore, it's okay to just buy the market when we go below 8. So sometimes if you exit a swing trade, and then you stop and you think and you're like, well, why did I exit? There was no real reason for me to. Then you can buy back your position at the market. Or, if you see, like for me, when I saw if 8 had been any sort of bear close, I wasn't going to buy back my position. But since it was a bull close, I figured it was reasonable to do. So I bought a little bit below 8 and I exited my prior long, basically break even, very tiny loss. What if 9 is a big bear bar closing near its low? Then I'll get out because that's when I would have exited had I, remained long. But it's not great to be long though. It's something, don't misconstrue that. It's definitely not like really all that great to be long. But I think we're gonna get a second leg up for the bulls here. So it's okay to be long and holding for a swing. Or at least a second leg. Something to consider. I looked at these a lot this weekend, but oops. We should at least get to here. Leg 1, pull back leg 2. You're usually going to get a second leg. The channel is usually the minimum target is a second leg the size of the spike. So anytime you look at a spike pullback channel, I'm sure there's something in here. Whoops. Like pullback, bull channel, basically to the high. So whenever you're in a trading range and you get these spike pullback, even this, I'm sure it's somewhere in here. Maybe not this one, but you can see my point. Spike pullback channels, there's going to be a reasonable one that fits. This is the difficult part about day trading is I made an irrational decision, and I mean, even if this goes to where I want it to, I'm going to make a third of what I would have because my position size is smaller, etc. But that's kind of the thing that makes day trading difficult is a lot of your decisions have to be made really, really quickly. And it's really easy to make mistakes. That's why you might eventually find you're pretty good at investing in stocks and figuring out the patterns on daily charts, etc. But you're still struggling on the 5 minute chart, and the reason for that would be is that you have so much time to make decisions on weekly charts, etc. And the failure rate is a lot lower. So breakouts fail a lot less on those higher time frames, especially bull breakouts on relatively liquid stocks that are probably going higher. So I think the minimum target for the bulls here is a leg 2 measured move. But bulls want a bull close out of bar 7 or 9. Do I think we go up all day? No, I don't think this is go up all day material. But I think we go higher. Okay, so bull close. The bulls, it's a high 1 because we haven't traded above anything else. And so they're hoping we get a high 1 and a breakout above the bar 6 high. The bears think that 6 is a possible low or high of the day. So they're hoping that this is just a pullback. The reality is if you sold below 6, you're probably going to scale in higher. It's very possible the traders who sell above 6 are going to make money. So you're going to have to keep that in mind if we go up to that area. And again, yesterday's high is going to be resistance. It's also a reality to trading. If you've been trading for less than 10 years, or I would say less than like 7 years or something, where you're going to make mistakes. And so you have to allow yourself a certain number of mistakes. So for me, I've been trading, 5 years, and I allow myself, I think, well, quote unquote, allow myself. I'm not trying to make bad decisions, but sometimes you're just going to inevitably make bad decisions. So I try to, quote unquote, allow myself 2 bad decisions per week. And, if I go over that number, I start thinking, well, I'm maybe over trading, maybe not doing things correctly this week. And if I have that number, if I take 2 bad trades, or it's less, I don't take as many bad trades as I used to. Most of my trades are fine, but my management within my trades is not always as good as it could be. So, usually I try, if I take more than 1 bad trade, that's an unusual week. But if I make, 2 bad decisions per week, that's fine. But not great to make a bad decision on the first trade of the week. What if 10 is the bear bar closing near its low? Well, the bears think that their bear trend started with a 6 and 7, and that 6 is the high of the day. So they're hoping for trend continuation, and they'll have a low 1 short if 10 closes on its low. Bulls, on the other hand, see 6 and 7 as the first leg down, 8 and 9 as the pullback, or I guess just 6, 7, 8 is the first leg, 9 is the pullback, and they think 10 is the second leg down. They still want a second leg up from 3, 4, 5. Remember what I said about this wedge? I should take my own advice in that, this was a pattern that happened over, you could argue 50 bars. So having a 20 to 25 bar correction would not be abnormal here. We're only 8 bars in. Now, does that mean that, if we're 8 bars in and we're supposed to have a 20 to 25 bar correction, we should get, this should only be a third of the way through. Does that mean that, since we went up 15 points in the first third of the correction, we're going to go up 15 points in the second third and the final third? No, it doesn't mean that, but it just means it shouldn't go down. It should be sideways to up. Am I going to exit below 10? I don't think so. Probably very unlikely. It's not a very high probability trade. It's a tight trading range of 7, 8, 9. Even if 10 closes on its low, that's not a low one I would ever sell and expect to make money. So those traders who are anyone taking a sell below 10, it's a very low probability, even if it closes on its low. So I'm just going to wait. And if the bears get a second consecutive big bear bar, then I'll get stopped out, and that's fine. So even if 10 closes on its low, can you sell it? I mean, you can theoretically sell anything for a low probability swing, but if you were selling below 10 right now, if you were doing that, you should not be expecting to make money. You Should be expecting to lose money. We're still always in long. Possible we get a third push down. Once I think we've started the move up, I might add, but I'm trading small enough right now that if it ran my stop is currently below bar 2. So it's below the low of the day. And if it ran that stop, that would be about an average position size, a little bit less than an average position size loss. So this can go pretty far against me, and I'm still pretty comfortable. However, once I feel comfortable moving my stop to below bar 7, I might increase my risk by adding on to the trade. So nothing for me to do here. I still think, obviously, 4 and 5 is the dominant force of the day and still the dominant force in the market. So we're still always in long. So the next bull bar we get closing near its high, it's going to be okay to move your stop below bar 3, or sorry, below bar 7. So let's say bar 11 is an outside up bar and it closes somewhere up here. We still might go pull back for a third leg down, 1, pull back 2, maybe pull back 3, but it's not going to get below here. Well, if this is going to be a bull move, spike, pullback, bull channel, it's not going to get below there. If this is a good looking bull bar. You can see support at the moving average on bar 11. I try to put myself in the shoes of a trader who did the opposite of me. So if you sold below, bar 8 with a stop above 6, how do you feel about your trade right now? Probably not great. If you sold below 10 with a stop above 6, how do you feel about your trade right now? Again, probably not great. You're waiting for the bulls to give up. You want a bull give up bar and a big bear bar closing near its low. It's just not happening yet. So the correction expected from 6 was 2 leg sideways to down. This is qualified as 2 leg sideways to down. Again, the bears, they think 6 was the start of a bear trend, and 4 and 5 was a bull trap on the open. If 11 is enough of a surprise to make me think the market's always in short, then it's probably reasonable to exit, but it's also okay to just look at it as a high too, I think. Okay, so a bit of a disappointing close. If the bears get another bear bar closing near its low somewhere down here, then I'll probably just get out and take my loss. It's fine. If 12 is a bull bar closing on its high, that would be the last chance for the bulls. So I don't normally hold this long, but I don't think it's wrong to. So I'm going to. I still think row isn't long. I think 11 is a good looking bear bar, and it's not what I wanted to see, but I think they need another bear bar on 12. And if it ends up being a bull close, then traders will buy. I can't tell if we triggered below it. Yes, we did. Can you sell below 11? Yeah, it's a credible swing. Might test the 3 high since this is a trading range and gaps should close. So you have to be aware of the bar 3 high. If we keep that gap open, it increases the chances for the bulls that we get some sort of trend, but I don't know if we're really gonna. I think we might have to get back down to 3 high. Really, what's important to see here is that we're still in yesterday's trading range. So at this point, it's very likely we're getting to the 3 high and probably a new low of the day. So what do I think we do the rest of the day? I don't know. I mean, it's possible we get a bear trend. We're obviously pretty overdone the upside, so we might get a bear trend. Probably okay. Well, it was okay to sell below 11. Looking for a swing. You can see we didn't. I'm kind of surprised we didn't get above this high, but problem is we're at the bottom of a trading range, but can't really do anything. Really haven't done the best job today, but it happens. So what if 13 is a big bull bar closing near its high? Then it would be a possible swing buy, but we're still on the swing sell below 11, obviously. 12 is disappointing, We might still get to a new low. Sometimes 13 will be a big bear bar closing near its low that looks kind of like 11, maybe a little larger, and that would increase the odds of swing down. Looks like we might get that, or it looks like we're at least going to get down to here. So I think I'm going to get stopped out of this trade. I can't really do, not really anything I can do about it. Wasn't all that great to be long, and I probably could have exited below 11. A couple of not great decisions on my part so far today. Good news is I don't revenge trade, so I don't, if I make a mistake, I don't take a much larger position size, so I'm really not down that much today. It's about the equivalent of one full position size loss, which is fine, but not great management, I don't think, at all by me. This did end up being a buyback and tested the high of the trading range, and 11 might end up being the swing of the day. So if I was short, you can exit at the market or around the close of 13 would have been fine as well. This is pretty climactic. We're going to get a second leg from it, but it's hard to sell the close of 13. This is trading range price action. So we're probably going to get back to the too low. The bulls who fade the breakout and scale in lower are going to make money. So really hard to buy above 14 though, even if it closes on its high. This is kind of the issue with what I was talking about with having a stop below here, is that there's going to be buyers below here. Buy above 13, I probably wouldn't. Like I said, the bulls, they're hoping 11, 12, 13 is a bear trap. Now we're going to rally, get a second leg up from 4 or 5. Possible that just 7 was the second leg up from bars 4 and 5. What if, well, 13 or 14 is probably going to be an inside bar. But what if 14 is an inside bar and then 15 is inside of 14? That would be an II after a sell climax and a credible swing buy. So it looks like 14 is going to be an inside bar. The bears, they see a spike 10, or sorry, 11, 12, well, I guess 10, 10, 11, 12, 13. Again, selling below 10, you can do it, but it's a really low probability. And you can take anything for a low probability swing, but you shouldn't be selling below 10 expecting to make money. This is one of those rare times where you do make money and you've made, 20 points on 3 points of risk. So pretty unlikely that it's going to happen, but this is one of those times where you were able to make a good amount of money. But I think most bears, well, tough to say that they're necessarily going to exit above 14. Bears are hoping that 14 is a pullback and that they're going to get some sort of low 2 short maybe, and then a swing down. And the bulls are hoping that it is a bear trap, 11, 12, 13, and the start of a bull trend. So we traded above 14. Initially, there are sellers. Second leg down for the bears, most likely. Bears would argue spike, 10, 11, 12. Sorry, 10, 11, 12, 13, pull back 14, maybe start of bear channel. If you get a low one short here, well, it's going to be a low one short regardless of what the bar looks like. It's technically a low one short for the bears if we go below it. But if it's a bear bar closing near its low, some bears might sell it for a swing, but they're probably willing to scale in, and they probably have a wide stop above 10. Even if we get a bull close here, it's probably not worth buying. Rally on 14, pull back on 14, rally on 15, possible 2 legs up. Sell climax high, 13 high is a magnet. So, consecutive bull bars. We can see as the market goes always in long, we reverse. As we go always in short, we reverse. So, trading range open. Maybe some sort of triangle. Broke up below, failed. Maybe it's a bigger triangle. So, am I selling 16 if it's a bear bar closing near its low? No, probably not. Possible low one short for the bears. I think 14, 15 is a little too strong, though, to make it likely that this is the start of the bear channel. Bears might have sold around 50% somewhere. Maybe 50% of the bodies. We didn't quite reach there, but 14 and 15 is going to be strong enough for a second leg up, very likely. Maybe we get a different wedge. 1, 2, maybe 3 somewhere over here. You can see the advantage for having confidence in your scalping, though, on days like these, where if you're buying above bar 5, or if you're on stop orders, right? If you bought above 4, you get 10 points, you take it. If 6 closes on its high somewhere up here, maybe you buy it back. Maybe you sell below 11, you get 20 points, you probably exit. 13 is climactic. It's really hard to do that consistently, though. So we might be trying to test the bar 13 close. You can see the rally on 14 and 15 was strong enough to overlap the bar 2 low, and it overlapped the body of bar 2. So no body gap or normal gap on the line chart, making me think that while we are always in short here, it's probably not going to last very long. So traders might be more looking to buy down here. Buyers below 15 scaling in lower. So what if 17 is a big bull bar? Well, what if 16 is a bull bar? It might be a second leg, 1, pull back 2. So it could be a second leg trap. We might be trying to get a test of the 13 high. Bulls see 14, 15, bull trend. I think that the pullback down to bar 13 is just a pullback from 3, 4, and 5. So 3, 4, 5 started bull trend. Deep pullback, 11, 12, 13. Buyers below 15, most likely. The bulls started a new bull trend, but it's really hard to want to buy when your signal bar is bar 16 and 14 is your possible low of the day. It's not really a very good looking signal bar. The same thing how 2 wasn't a great looking signal bar, not the high, not the low of the day. 6 wasn't all that great, so more credible, but or not necessarily more credible than 2, but still not all that great. And 10 not all that great, so we might have to get back to that low. You can see using wide stops and scaling in on trading range days is a really effective strategy. So what if 17 is a bear bar closing near its low? You could argue it's the low too. The low one was below 15. Probably sellers above 16 scaling in. Trader who sells above 16 knows they're going to be able to scale in and make money. The bar 13 closed is an obvious magnet. So can you sell below 17? Yeah, I mean, you can sell it for a swing if it closes on its low. I don't have an issue with that. You're taking the chance that we've started a bear channel, maybe this channel line. But it's the problem with that is it's kind of hard to draw, that's the trend line. It's hard to draw the channel line. So the channel line would be like this. However, this as the channel line makes this look like more of a triangle. If you redraw this as a channel, it makes you think maybe we have to get another leg up. So it's maybe not a very strong bear channel. Probably buyers below 17. It might still be a credible swing sell, even with the tail. But the traders who sold above 16 are probably going to scalp out somewhere below 17. If you bought for any reason 14, 15, you probably don't exit below 17. You're probably fine with that. So you're going to buy more, if anything, if we go lower. Bears have an open gap here. If 18 is a big bear bar closing near its low, it would be a sell to close bar, but 16 and 17, I'm not sure you really want to sell to close. But it would be always in short. If it's a big bear bar on 18 and then you get a bull bar 19 for a reversal up, that would probably be fine for bounce. hard to do much here. Again, we're always in short, and the daily range, 30 points, might have to get larger, but I don't think we're in an overly bullish area or an overly bearish area on the daily chart. Do I think today's going to be an inside day? I'm not really sure. I mean, we got kind of close to the high and weren't able to get above, and we're kind of getting close to the low. Still 15 points away. But if we do get to the low, there's going to be traders willing to buy the low. So the question is, where are they going to scale in? What's a reasonable amount to scale in on the daily chart? I think 50 points is probably reasonable, maybe 25. So I don't know if there's buyers directly below the 913 low, but maybe 25 points, maybe 50 points below. There probably should be. So what if 18 is a small inside or small bar like this closing on its high? It's a possible low of the day. Bulls are hoping that this is the start of the bull trend, 14, 15, and that we're going to start to swing up. The bears are hoping that 11, 12, 13 is strong enough for a second leg down, and that this is just a two-legged correction. So 15, 14, 15 first leg, pull back 16, 17, and then 17 second leg, they want a low too short. So it doesn't look like it's going to be anything all that great for anybody. What if it's an inside bear bar closing near its low? You could sell it for a swing. It's a good bar to be expecting a swing on, bar 18. Where's your stop? Well, I'm not sure that above 16 is enough. The low one short for the Bears. Well, you could argue it's a low two, but it's an inside bar, so inherently a low one on a small time frame. But if you're selling, you have to sell small because you probably need a wide stop. So 18 is a doji bar. It's a bear doji bar, so we're probably always I think we are always in short from this, but 16, 17, 18, not really any of them are all that great. Nothing is convincing me that we're going a whole bunch lower. If we had a bear bar closing near its low on 19, you could sell, take a chance that we're going to get a measure move down. At that point, you can probably put your stop at the 17 high. If 19 closes on its low, like somewhere down here, you can probably just put a stop and go up here and take a chance. I think that this pullback, like I mentioned, well, it's actually kind of funny. It's possible. So 12 or 14, 15 didn't get to the 50% pullback. We got leg one down. And then 16 got to the 50% pullback. So the bears, they sold the close. They scaled in at 50%. The question's becoming, are they going to scalp out down here? Which they might. So far, the bulls faded the bears with the short, or they bought below 2 and they made money. So if we go below 13, they might make money as well. Bears want a measured move down to here. It's possible, even the trading range could have started here, and then we got one more leg up. Now we're going to get a leg down. It's helpful if you just think through all the possible things that can happen, because if you think through all the things that can happen, or like all the possible patterns that this is trying to create, one of the things you're thinking is correct. So if you think of the possibilities, then you'll have an easier time as they start, as the correct pattern or the pattern, one of the patterns you were thinking of starts to form. You'll have an easier time recognizing it. So if 19 is a bear bar closing near its low, you can most likely sell it for a swing. But a little difficult, I think, because you just got basically 3 bars with large tails. If this pulls back, let's say it pulls back and we get a double top bear flag with the 17 high, that would be probably a little bit better, I think. So the real question you have to ask yourself is, what is the probability that this is a spike 11, 12, 13, and now we're in a bear channel? The bulls are thinking we're in a trading range, and the bears think we're in a bear channel. And it's one of those things where a lot of traders might be looking to sell a pullback, so you might not get it. So 19, bears want a strong close, bulls try and prevent it. I think, though, if we get a second leg up, it's probably going to form a double top. Bulls need, a pretty good looking surprise. They're going to end up getting it. So 19, the bulls see a double bottom, 14, 19, but neither one of those is good signal bars. The bears, some of them sold to close 12, scaled in, but we're buying back shorts around the 12 low. That's what caused 19 to have a big tail. There's probably sellers above 19 if we do go above 19. 20 is a bear bar closing near its low. You could just take a chance it's a bear channel and pull your stop along with the lower highs. So if you get the new low, your argument is it's a bear trend and you can sell, risking 15 points, trying to get down here. So you sold this low, basically. Let's pretend you sold the breakout. Your risk is 15 points. Your reward's 22 points. And, I don't think it's 60%. I don't know if it might be 60% chance you get there. Maybe it's more like 50-50. It's a reasonable trade either way, but I'm not sure the math is ideal necessarily. I would like to see a double top bear flag here. We're forming a triangle, so it's a breakout mode pattern. Oops. So bulls who bought the close of 5 were not able to, or sorry, bulls who bought above 4 and did not scalp out for 10 points during 6 got a 21 tick trap on 7. So they were never able to make 10 points if they did not immediately get out during bar 6. Looking like we're going to get a bull bar here. Again, I want to see a double top bear flag. After 4 straight bear bars, 16, 17, 18, 19, this should be a minor reversal up. What if it becomes a bear bar closing near its low? Then you could sell it for a swing, but I don't think it's going to become a bear bar closing near its low. Looks like a second leg up. The bears think 14, 15 first leg, and then a 4-bar bear bar pullback. So yes, there was 2 legs within this. So the bull see bull trend, first leg down, then pullback above, and then second leg down, and then now this is their high 2 double bottom bull flag, and they want a measured move up. The bears see 1 and then pullback, and then this as 2. It was a complex pullback. So they want a bear bar closing near its low for a potential swing down. Maybe we have to close the gap with the bar 7 low. But I'm not that sure of anything right now. It's because it's the trading range. So in general, in trading ranges, you want to take the smaller signal bars. The middle of the trading range is right here around the moving average. So that's that's an area where if you're going to trade in that area, you don't want to be doing it with large risk because the probabilities are never as good as you want them to be. So traders prefer to risk a little bit less to offset the risk reward. So the bears want a double top bear flag with 17 high, maybe a head and shoulders 15, 17, and 20 or something. I think it's going to be okay if it's a bear bar closing near its low, but you'll be selling the middle of a tight trading range, so that would be your issue. But you'd be betting on basically trend resumption. So bears want to see a bear bar closing near its low here. The bulls are hoping that we have a bull trend from 14 to 15, but I think 10, 11, 12 is going to get a lower high. So I think this reversal up is going to be minor. I'm not that convinced we're going to go up very strongly for a long time here. $21 is a bear bar closing near its low. I'm probably going to take it, but I might use a measured move stop because I don't think a tight stop in this area makes a whole ton of sense. Probably a trading range, so I'm sure we're going to get anything worth selling on 21. The low too short at the moving average, true, but even if this closes on its low, you're going to need a wide stop. You can't sell this with a stop above the bar because the low is probably not going to, or the high is probably not going to hold. But again, 21 would have to close on its low. You'd probably get a little bit bigger. You don't want it to just look like a doji bar, basically. So if 22 is a bear surprise bar, then you could sell that. Again, same kind of argument. If you have Al's encyclopedia and you go through it on a regular basis with his daily, basically at the end of the day, he posts slides on the day, and you'll notice that the vast majority of bars are credible swing trades. And you can take bad entries if you're really good at managing trades, but the problem is, in order to get really good at managing trades, you have to probably spend a lot of time getting really good at taking good entries. So it's kind of a one of those things. By the time you can manage trades so well that you can take bad entries and reliably manage them properly, you're probably not going to want to take the bad entries. So what if 22 is a big bear bar closing near its low? It's a credible swing short. What if it's a bull bar closing near its high? I'm not buying. It's not a great buy the close bar. If 22 looks like 15 or even like 4, I think you're now buying really high in a trading range. So I'm not going to do it. But if it's a bear bar closing near its low, it's okay to take that first swing short, and I'll probably do that. Needs to be a bit of a surprise, though. I'm not going to take a small bar here. It needs to basically convince traders that the bear trend has started again. Not really anything for me to do just yet. So probably buyers below 21 or 22 if we get there. But low too short for the bears. Not a good sell, though. Even if we get a big bear bar 23, it's a little bit difficult because we had 3 straight bull bars. It makes the trading range more likely. I mean, I'm kind of tempted to keep the video going, but at this point, I'll just close the video. So I'm not. So if we keep going down in like this sort of fashion, I'm expecting maybe a midday reversal to 13 and like 35 or something. Maybe a midday reversal, but if this gets stronger for the bears, I would be open to selling for a swing. Or if we just slowly rally and get a double top with this, maybe around the middle of the day, that you could sell for a swing as well. But all right, that's going to be it.